Okay, we're going to get started, and I want to thank everybody for joining us today and taking time out of your schedule. This is going to be about home buying, and my name is Carla Giacomini. I'm the Director of Marketing here at Alterna, and I'm really excited that we're hosting this webinar to help you through your home buying journey today. Just going to let you know through the next hour, we're going to be talking about the home buying landscape, trends, and tools and tips to help you in your home buying journey. So before we get started, I should say, I just wanted to go through a few things, right? So if you're going to be in listen only mode, and if you have any questions as we go through this, please put them in the Q&A at the bottom of your screen, and we will endeavor to answer all of your questions after the webinar, after we go through all the content. If we don't get to your question, we will definitely get back to you by email. Okay. And then the actual session is being recorded, right? So what we recorded so that you can come back later and view it. We're going to actually put it onto our alterna.ca website tomorrow. So if there's anything you'd like to go back and take a look at, it will be there for you to watch again. And if there is, just from a questions perspective, if general questions work best, if, you have something that's very specific to your situation, you can email us or call us or book an appointment, and we can talk about your specific situation. Okay, we're going to move on with a poll. So I wanted to, we just want to get your input as well. So do not fear, the poll is all anonymous, so we want you all to join, right? So it should come up, it should be up on your screen now, and this is what best describes you. So are you a first-time home buyer? Are you looking to upgrade to a larger home or a different area? You're a retiree, you want to downsize, right? Your home's too big. You might be looking for a second property, maybe a vacation home or a rental. Or do you want to help your kids or grandkids with their first home? We all know that it's difficult to get into the housing market, today. So they need a little helping hand. So I think we probably got pretty much everybody on here. So there's a lot of first-time home buyers, and then that's followed by people who, want to help their kids and grandkids, which is commendable. So we'll go through that. I wanted to now introduce Rukshana. She has been with Alterna for over 15 years. So she has definitely been an Alterna supporter. She knows the ins and outs of, providing you with a financial plan and getting you through the home buying process. So I want to welcome Rukshana. Thanks for being here with us today. And we are going to get started. She is going to take us through the market update to help you understand what is going on and what are the trends. Over to you, Rukshana. Thanks for joining.
Thank you, Carla. Good afternoon, everyone. Thank you for joining us today. My name is Rukshana Pokharel, and I'm a mortgage banker for Alterna, covering Bolton Branch and Bramley Branch. So let's dive in. What's happening in home market trends in 2025? Ontario home price decreased by 3.8% in March on year-over-year basis, with 2.2% increase in Ottawa and 2.5% drop in GTA. The average single-family home in the province sold for $860K in March this year. Ontario condos decreased by 5.3% year over year to $582,000 in March 2025. Ottawa price decreased by 4.3% to $400,000, and GTA decreased by 2.6%, around $465,000. In April, Bank of Canada held its key interest rate to 2.75%. Banks and credit unions held the rate at 4.95%. The next Bank of Canada announcement is on June 4th. In 2024, about 25% of mortgages have gifted down payments in Ontario, considering mostly high-ratio mortgages, closer to 30% across all mortgage types Canada-wide. Gifted down payments have doubled since 2018.
So Roxana brought you through the numbers. As you can see, definitely the home prices are decreasing in some of the markets, GTA especially. There are some decreases, but also, the mortgage rates have come down as well. So people are now thinking, it might be a good time to get into the market. And the fact of people are, parents and grandparents, as we saw from the poll, are helping their children and grandkids with down payments. We see that that's an increasing trend year over year. So, stats really support that. One of the things that we do know for sure in the GTA and Ottawa as well, that condo market, there's a lot of inventory. So it could be a time for someone who's just getting into their new home, could be a time to get into the market for sure. There would be some opportunities. As we're seeing, there's a lot of availability in condos and prices are coming down.
Thanks, Carla. Housing market update. The housing market downturn may be nearing its end based on numbers of factors. First-time home buyers are expected to enter the market in 2025 as a result of some of the government incentives that took place late 2024 to spur movements. As of December 15, 2024, 30-year mortgage amortization for all the first-time home buyers and new builds. Price cap for insured mortgage also increased from 1 million to 1.5 million. Canada's inflation rate is expected to remain around 2% in 2025. Current inflation rate is at 2.3%. Home listing increased by 12.3% from March 2024, providing buyers with more options. Interest rates are likely to decrease marginally in the second half of 2025.
So as Rukshana mentioned before, we know that there's another Bank of Canada announcement coming in June. Could be a slight decrease. And we know that there's, inventory is we're in a better position with inventory of homes than we were, last year as well. So the fact that the inflation is remaining around 2 is actually very good as well. And don't forget, like people that are getting into their first home, they now have, especially in markets like the GTA, they now have the opportunity to have an insured mortgage up to 1.5 million, which is so important. GTA prices are quite high. So what this does is, and the fact that you can actually decide, hey, maybe I could go with a 30-year amortization. This maybe gets people thinking, hey, what is possible to get into that home sooner than I was thinking, right? So the 30-year amortization would reduce your monthly payments. It gives a little more flexibility as far as some money during the month to pay for your expenses. So the government really has put these programs together to get those first-time home buyers into their first home sooner. Okay, back to you, Rukshana.
Historical 5-year mortgage rates. According to Stats Canada, the 5-year fixed mortgage rate is the most popular in Canada, accounting for nearly 50% of all outstanding mortgages. Mortgage rates have been a big impact on cost of home ownership in Canada, and this has an effect on Canadian home prices as the economy as a whole. There has been an overall downward trend on mortgage rates with fluctuation periods of increases and decreases. Mortgage rates dropped to its historical low during COVID pandemic in 2020 and 2021.
So the key takeaway here is, although we saw lower mortgage rates during the pandemic, that was really an anomaly. If you look at the trend, the mortgage rates have kept going down, except once we got obviously out of that pandemic. So, the rates now are, I guess, similar or lower than what they were, in the early 2000s. So, I think the mortgage rates are in a good place. And we may continue to see some slight decreases this year, depending on what the Bank of Canada announces. There's a couple of questions that came in through the chat or the Q&A, and maybe we can handle them now. So one is asking, what's a gifted down payment? So, that really is someone that's, myself, like I have two children, and, if they are purchasing, trying to purchase a home or save up for a home, and Roxana will tell you about some of the great ways to save for a down payment. One is the FHSA. If I want to help them along, I would give them some money, let's say, to add on to that down payment, especially if, you're trying to, get a down payment that's more than just the minimum 5%, right? So that's kind of what a gifted down payment is. If that's not clear, just, yeah, put in the chat and come back to me, for sure. And then there's another one, another question about the condo listing price decreases, like that are they limited to smaller condos or investment condos, right? And it says it seems the inventory is largely because of the increase in these smaller units being available. And I have to tell you, like, and I live in Toronto, but in Toronto, that's all they're building is smaller condos. Any of the condos that have gone up in the last 5 to 10 years are all small. Like, they're like 500 square feet, 600 square feet, 700. So, that is kind of the norm, I would say. So, if somebody's looking in downtown Toronto, that's probably what they're going to find, especially if they want something that's fairly new. So I'm not an expert, real estate expert. I can just tell you from my experience. And Roxana, I don't know if you have any insights into that as well.
No, you're right. What you said is right. Yeah, it's every year the house, like the square foot is going down for the condos. That's
right. Okay, so there's there's another question, but we'll leave it until we get to the section because I think it'll be relevant on fixed rates versus and variable rates. So let's move on to just buying a home and the cost of home ownership, Roxana, because I know this always trips people up, because I remember when I went to buy my first home, you get out there and you're so excited, and then you see what you want, but then you realize, well, I might not have enough money because I have to also pay for all these other things
expenses.
as well, right?
Correct. That never gets taken into consideration, right?
Yes.
The buying home is one of the biggest purchases that you'll ever make. Just like any major investments, preparation is the key. To get to know what you want, you need to be well informed, financially ready, and be aware of all the costs involved. Many people focus on the price of the home itself, and like Carla said, no one really talks about the additional cost involved. Closing cost. What is included in closing cost? Closing costs are one-time expenses that you pay when finalizing your mortgage. It includes your appraisal and registration fee, your down payment, your land transfer tax, mortgage insurance premium, legal fees, and home inspection fees. These are one-time payment, but then there's an ongoing cost. These are the expenses that you'll pay regularly to maintain your home, such as property tax, property insurance, utilities, maintenance, land maintenance. Consider your readiness for your home ownership by taking into account all the costs involved while purchasing and maintaining your new home. Are you ready for your home ownership? Do you know how much you can afford to spend on your first home? Know your budget before buying a home. Consider your income, savings, debt, and your monthly expenses like mortgage payments, utilities, and groceries. A clear financial plan will help you buy wisely and avoid surprises. Have you saved enough for at least 5% down payment towards your first home? With mortgage insurance, you can purchase a home with as little as 5% down payment, depending on the price of the property. This helps make a home ownership more accessible, even if you don't have a large amount saved upfront. Do you have a regular income source? Do you have a regular income to support your mortgage as well as your other expenses? Do you have a credit history? Lender look at the credit history to find out if someone is a reliable borrower. If you don't have a credit, establish your good credit by acquiring a credit card. Use it for small purchases and pay off the full balance each month. Do you have a healthy credit scores? Poor credit scores make it harder for mortgage approval. Always meet your monthly minimum payment on time, but don't stop there. Be aggressive about clearing your credit card debt, or at least bringing each credit card balance under the 35% of its credit limit. If you're recovering from a bankruptcy, apply for a secured card to help you reestablish a pattern of responsible borrowing. Do you have a handle on your debt? A high debt load could hinder your ability to meet your financial obligations. Your monthly debt payment, that includes your housing cost, your car payment, credit card payments, line of credit, should not exceed 40% of your household gross monthly income. If you're carrying more than that, be aggressive about paying it down so you're all set up for your success when you want to start your home ownership journey.
So one of the things Rukshana went over is credit and credit history. So we do have a lot of resources. We're not going to really talk more about that, but I know that there are always questions around credit and credit history and how to improve your credit score. So I'm just going to point you out if you are interested. There's we've got a ton of resources on alterna.ca under borrowing that talks about credit and credit history and how to improve your credit score. We have a number of articles as well that can help guide you. So although we haven't included detailed content in this presentation, you can actually access. And if anybody is interested, if they want to throw it in the chat, we'd be more than happy. Like we can send out a follow-up email and link you to the information on the credit and credit score. So yeah, you can just if anybody's interested, throw it in the chat, and we'll send it out to you after the webinar. Okay, so we're going to go to 25, and we touched on this a little already, the 25-year versus a 30-year amortization.
Thank you. 25-year versus 30-year amortization. So if you're putting 20% down payment on a property and taking out a conventional mortgage, you can amortize over 25-year and a 30-year. Now let's talk about 25-year versus 30-year. 25-year amortization makes the most sense when you want to save interest and get most competitive rates. A 30-year amortization makes more sense when you're most concerned about your cash flow. If you have a lower it helps you lower your mortgage payments so that you have more cash available for your day-to-day expenses and savings. This can help you get rid of your new home. This can help you get your new home quickly. Choosing a 25-year and a 30-year amortization period depends on individual financial circumstances, long-term goals, and comfort with your monthly payment amount. The government made 30-year amortization available as of last December to all the first-time home buyers, as well as the new construction purchases.
So again, I think this is all about what you feel comfortable with, and picking the right amortization that fits your situation, and also how quickly do you want to get into your home, because a 30-year does reduce, right, your monthly or biweekly payments, however you're paying for it, but it is a longer commitment, right? So it's very personal, the choice you make. So that's where it would be good to talk to an advisor and talk through things.
Down payment. That's a big question. How much down payment do I need? Well, let me explain you the difference between a high ratio mortgage and a conventional mortgage, and hopefully the answer will become clear. A high ratio mortgage is when you put down less than 20% of the purchase price on a property. What happens in this scenario is that credit unions and banks will use a company that insures these kind of mortgages. These insurance companies come in and guarantee that mortgage for us. They charge you a premium to do that, which gets added to your mortgage. So you don't have to pay upfront. This is added to your mortgage amount. Honestly, it's a great way for someone to save. Whereas a conventional mortgage is when someone puts more than 20% down payment on the purchase price. In this scenario, the credit union approves the mortgage themselves. Minimum down payment. With average home prices in Ontario ranging from $684,000 in Ottawa and over $1 million in GTA, your down payment strategy is crucial. As of December 15, the insured mortgage cap moved up to $1.5 million from $1 million.
So this is fairly new. It just came into effect last December, right? So again, in areas where there are high home prices in the GTA, for example, this really does help first-time home buyers get into their home a little sooner, right? So there are some questions, and I'm not sure, maybe Tom, so there's one, Natalia, one of our members, is asking who determines the percentage of down payment? For example, the 50 versus the 20%, is the seller or the bank? So I would say, Tom, this is neither, right? This is really government, right, Tom? Like of what gets insured of the down payment. Are you there, Tom? Or do you know, Rukshana? Or we can come back to it.
You can come back to it, Carla.
Yeah, okay, let's come back. Sorry, my bad. Okay, let's move on to the mortgage insurance because there are some questions around that.
Mortgage default insurance. So mortgage default insurance protects the lender in case the borrower defaults on the mortgage. It's required on all the mortgages with down payment less than 20%, which are known as high ratio mortgage. To be eligible for a mortgage
sorry, Rukshana.
No worries. To be eligible for mortgage default insurance, you will first have to meet the financial institution's lending qualification as well as the underwriting standards of your mortgage insurer. The insurance is offered by a number of mortgage insurance, including Sagen and CHMC.
Okay. I'm going to go into another poll now if we're all set. So Ian, if you wanted to launch the second poll is when you're planning to buy a home, or for those that already have, when are you planning to buy a home, or those that have a mortgage, like when are you renewing, right? So, but it's just to get an idea of, how far are you along in your journey, and for me anyway, planning sooner rather than later is always better. So the more time I have, especially this, as Rukshana said, this is a really large purchase. It's probably the biggest purchase that anybody will ever make, right? So I see that a lot of people have said like in the next year, more than a year. So good for you. You're thinking about it in advance and planning in advance. And this is the time to reach out. Rukshana is going to talk to us about pre-approvals and what have you, but it's a good time to reach out, do your homework, and know what you can't and can't afford, so that once you start looking for that home, you've got everything in your back pocket ready to go. So we can share the results. You'll see that. So it was about 23% said in the next 6 months, 35 in the next year, and 42 in more than a year. So people are planning in advance, which is great. Okay, so now we're going to move into how to start saving for that down payment. And there were a couple of questions that came out of the Q&A on that as well. So I'll let Rukshana talk to that piece of it.
How to start saving for your down payment. Build your budget so you can decide what you want to put aside every month towards your dream home. The easiest way to save money is to put your down payment into an automated savings account. That's right. Set up a pre-authorized contribution from your employer where a portion of your paycheck gets deposited into your savings account. Automate your savings. While it can be hard to find extra cash, you can direct any windfall towards your savings, like your bonuses, your tax refunds. Open a first home savings account, FHSA. What is FHSA? FHSA is a retired savings investment account designed to help individuals save their first home purchase. To be eligible for this account, you must be at least 18 years and must not have owned a home in previous 4 years. This account combines the tax benefit of RSP, Registered Retired Savings Plan, as well as a tax-free savings account. Contributions are tax deductible, and withdrawals for a qualifying home purchase are tax-free. The annual maximum contribution room is $8,000 with a total lifetime contribution of $40,000. The Home Buyers Plan. A Home Buyers Plan is a program that allows you to withdraw from your Registered Retired Savings Plan to buy and build your qualifying home for yourself. The Canadian government increased Home Buyers Plan withdrawal limit last year to $60,000. If you're purchasing a home with a partner, each one of you can withdraw $60,000 from your RSPs. This program allows you to pay back the amount withdrawn within the 15-year period. Tax-free savings account. Tax-free savings account is a registered investment account where your money goes tax-free. You can contribute, earn interest, and withdraw funds all without paying taxes on your investment gains or withdrawals. This year contribution room is $7,000. If you make the contribution, you're eligible to withdraw up to $100,000 in total from both your first home savings account as well as home buyer's plan to apply towards your down payment. To learn more about these savings plans, please reach out to your branches or book an appointment online.
So there is a question that came in, which is FHSA more advantage? Like, is it better to put into an FHSA or utilizing your RSP? And I would say, like, which is the home buyers plan program, right? So I would say if you have the ability, you should do both, right? So as Rukshana said, the FHSA, you can put up to $8,000 a year, up to $40,000, and it's cumulative. So if you opened up your FHSA in 2024 and you only contributed $4,000 in 2025, you can contribute the 8 plus the 4 that you didn't put in 2020. In 2024, right? So it's a great plan. You can decrease your taxes, right? You can remove, like, basically it comes off of your income when you do your taxes, and it's not taxed when you take it out. So definitely, right, Rukshana, that FHSA is definitely a yes, right?
And one thing, Carla, with RSP is like when you take it out, you have to pay back within 15 years, whereas
absolutely,
you don't have to. It's your money, tax-free. So yes.
Yeah. And you know what? I would say that if you have the opportunity, do both, right?
Of course.
Yeah, if you do have the room and the opportunity, you would do both. As Rukshana said, yes, for sure. You have to pay that RSP back in 15 years. So, you also have to calculate that in your timeline of, your mortgage payments and everything else, right? But if it gets you to the 20% down payment or the 5% or what have you, then great, right? And one of the other things, and I don't know if we mentioned this, is, if there are two people that are purchasing the home, like, if there's partners, two people that are purchasing a home on the FHSA, you can actually, each of you can contribute 40 and 40. So, and also with the home buyers plan, same thing, right? The home buyers plan has gone up to 60, right, Rukshana, now?
Correct. You can withdraw up to $60,000.
Right. And that's for each person if you're going in together, right? So that's, it's nice. So,
it's definitely
okay, so somebody is asking, yes, for the home buyers plan, it's 60,000 each, right? So if I'm purchasing and with my partner, I can take 60,000 on the home buyers plan out of my RSP, and so can my partner. So that's a total of 120.
Right. Correct.
Right. So yeah, because that was a question that came in on, but okay, so there's another question. So on the FHSA, you don't have to pay anything back. So you put in the money up to 40,000, 8,000 a year. When you take it out to purchase that first home, like, that's it, it's done. You don't have to pay anything back. On the home buyers plan for the RSP, you definitely have to pay it back within 15 years. 15 years, right? So, somebody's asking, isn't it better to invest in the FHSA first? If you're looking for a home, absolutely 100%. Open an FHSA if you haven't and start contributing. That would be right, Rukshana. That would be my answer.
Yes, correct.
Yeah.
Definitely, both are a great savings tool, right? Like, it helps you purchase, definitely. But I think FHSA is I find it, I'm more in the favor of that because you don't have to pay back. Whereas for RSP, you have to pay back. Right.
Absolutely. Absolutely. Anyway, a lot of good questions coming in. Keep them coming. Okay. So there's a question that's interesting. So they're saying, is there an age limit for the different, like the 25-year versus the 30-year amortization, right? Rukshana, they're asking, is there an age limit? No, it's just, I'm not aware of any age limit. No,
there's no age limit for amortization. No.
Yeah. Okay, perfect. Okay, let's go to the pre-approval, which is another important step in the process.
Correct. Importance of mortgage pre-approval. You are pre-approved for a mortgage once a lending institution has vetted you for a specific mortgage amount after investigating your financials. You will know your spending ceiling. you'll know your interest rate and how much monthly payment will cost. Mortgage approval depends on several factors. Here's a simpler breakdown. Credit scores. Higher credit scores, the better chances of approval. Job and income stability. Lender want to see that you have a steady income to cover your monthly payments. Debt to income ratios. If you don't have too much debt compared to your income, lenders are more likely to approve you. Down payment. The bigger down payment can improve your chances and lend to better loan terms. Loan to value. This compares the loan amount to the property value. The lower is better for approval. Employment history. Having a consistent job history makes you look more reliable to lenders. Residential stability. Living in one place for a long time can show lenders that you're financially stable. Savings and assets. Extra savings or investments can help strengthen your application. It is important to note that these criteria can vary. To determine your specific eligibility, please book an appointment with one of our mortgage advisors who can assess your financial situation and guide you through the application process. Use our mortgage affordability calculator to calculate your loan amount you may be eligible for. Our mortgage payment calculators can help you see what your mortgage payments will look like under different scenarios.
Okay, and the big question, is it a guaranteed, is a pre-approval a guaranteed mortgage?
Is my pre-approved mortgage a guaranteed mortgage? The answer is no. A mortgage pre-approval doesn't guarantee you a loan. It's just one step towards your approval. It helps you determine how much money you can spend on a home based on your financials and your lender guidelines. Your pre-approval also provides the interest rate and as a result, your projected monthly mortgage payment. At Alterna, our pre-approval is guaranteed for 120 days. So if you make an offer on a home during that time and the interest rate rise, your rate won't rise. But if the interest rate drops, your rates will drop.
Yeah, so really important, right, Rukshana? Like, get your pre-approval. It's good for 120 days. And at least you know where you stand and you feel then comfortable going out and looking for homes within your price range, right? And if the rates do drop, if let's say in June, Bank of Canada drops the rate, and consequently, if the mortgage rates go down, then that rate will be, the updated rates will be honored. You're not locked in, right? And but if they go up, then you still have a good deal because you can get whatever was pre-approved earlier if it's a lower rate.
Correct. So you would get our lowest rate within that 120 days of pre-approval, which is great, I think.
Yeah, absolutely. So yeah, do that. And then it's also peace of mind, right? You know exactly what you can actually afford. Okay, we're going to go on to a fixed and variable, and we've got some questions in the chat on this too, Rukshana. So I'll let you go through this and then maybe we can hit the questions.
Fixed rate or variable interest rate mortgage, right? There is no right or wrong answer to this. It always depends on your financial situation and your preferences. A fixed rate mortgage stays the same for the term, including the mortgage payment. Whereas for variable rate mortgage, it changes with Alterna's prime interest rate, which means if the rate increases your mortgage payment, more will go towards your interest payment than your principal. If the rate drops, then more will go towards your principal. Some people prefer stability. So with fixed rate, it's more stable, whereas with variable rate, it's unstable. Let's talk about the pros and the cons. For the fixed rate mortgage, the interest rate remains constant. Amortization of your mortgage is guaranteed to remain the same. For variable rate, interest rates are typically lower versus the fixed rate mortgages, but that's not always the case. So with a variable mortgage, you have a flexibility to convert into a fixed rate mortgage at any time. Let's talk about the cons for the fixed rate. Fixed rate you cannot take advantage of any decreased interest rate during the term of the mortgage. For variable, when the rate goes up, more of your mortgage payment goes up. So if the mortgage payment when the rate goes up, more of your payment will go towards your interest than your principal. Amortization may increase. Mortgage payments may increase significantly at renewal.
So, there was a question in the chat, Roxana, about, if I am a first-time home buyer, am I better off getting a fixed or a variable rate, right? So,
Again, like I mentioned before, right? It depends on your situation. So this is something that it changes. Like there's no right or wrong to this. Like there's no right answer to this. So why don't you book an appointment, contact me, and we can discuss the situation as a first-time home buyer and see what suits your needs, whether a fixed rate or a variable rate.
yeah, and I think Roxana mentioned, right? Like, on a fixed rate, and there was another question, I believe, in the chat that talked about, let me just see. I believe they were saying, if the rates in a fixed mortgage, if the rates go down, are you able to take advantage of the decrease? Or are you locked in?
You're locked in for the term of the mortgage.
Right, right. So again, if I guess like Roxana said, the best thing to do is talk it through with an advisor. However, if you're the type of person that wants to know exactly what they're paying each month and doesn't like surprises, because the rates could go down, but they could go up as well, right? And that's what you're dealing with on a variable rate. Right. And I have to say, like, don't quote me, but the majority of I think mortgages in Ontario are fixed rates.
Fixed rate.
Yes, they are fixed rates. Yeah, 5-year fixed rate, right? So, but again, that's a discussion. So if you feel like, hey, you know what, maybe mortgage prices, rates are coming down. Maybe you just want to go for a 1-year variable and then get locked into a fixed rate if they go down. Like those are all discussions that, you need to have with the advisor, and you need to feel comfortable with as well, because that's the biggest piece of it, right? You need to be comfortable with what your decision is. Okay. Okay, 8 steps, the 8-step guide to purchasing a home.
When you're preparing to buy a home, the earlier you get started, the better. Working on your finances a month prior to buying a home will improve your budget and mortgage options. But even if you're ready to buy now, there are steps you can take that will help you in home buying process. First step, make sure you're ready to understand the cost of owning a home, which we talked about earlier about, and we don't talk about these costs more. We just focus on the price of the home. So let's focus on that. Other costs involved around buying a home. Get a pre-approval. Find a reputable real estate and a lawyer. Make an offer on a home that fits your needs and budget. Get a home inspection. Finalize your mortgage, close the deal, and move in.
Okay, great. Thanks. Just going to go to some of the tools. And I mentioned earlier that if you go to alterna.ca, there's a lot of great articles and tools for you. So I've put them on here, and I put the QR codes here as well. If you do want to scan them, you're interested in anything. There's a number of calculators. So we have a mortgage affordability calculator. There's the mortgage prepayment calculator. We talked about savings. There's a TFSA calculator, and there's an RSP calculator. So if you go to alterna.ca/calculator, or if you scan the QR code, you can go and try all these tools and do some of that research or homework to get you started into your journey, right? I mentioned articles. If you go to alterna.ca/blog or click on the QR code, there are a number of articles for first-time home buyers. I talked to you about credit score. If you want to know about credit scores, we have a number of articles there as well to help you understand what is the credit score, how can you improve your credit score, what are lenders looking for in a credit score. So, make use of that as well. Again, Rukshana talked about the saving for a down payment. We have a budget planner. So if you go to alterna.ca/budget planner or scan the QR code, this can help you plan out your monthly budget and how much are you saving for your down payment, or it can actually help you plan out for future. So Rukshana made a point of talking about the all the different costs involved. So put that in the planner, right? And I have to tell you, being prepared gets you, most of the way there, right? And takes that anxiety level way down, right? So use the tools that are available to you online for sure. Okay, so we are going to take some other questions now, and as Rukshana has already responded some of these questions, so let me just see what else we have in the queue here. There were a few more. So there's one about oh, and are there any regulations, tax or otherwise, pertaining to gifting down payments to adult children? So, for example, Roxana, if I wanted to provide my children with, I don't know, $10,000 to help them with their down payment, the question is, are there any is that taxable? Are there any tax implications?
Can I get back to you on this one? I don't think
Yeah,
there is.
I don't either. I'm not aware of
I don't
any.
think there is.
Yeah.
This is a gifted money, so there is no, but I will, let me get back to you on that one.
Yeah, we'll definitely, we'll put in the email. So I think I mentioned this before, but we will actually send out an email after the webinar. So we will actually answer any questions, but this, I'm pretty sure that there's no tax there, but we will definitely confirm with you, right? So there's another question with the new government rule. Like, so we know that Mark Carney's now the new prime minister, and he has been talking about removing the GST for home purchases, right? So the question is, how does that help a first-time home buyer? So essentially, whenever this gets passed, I'm not sure the exact date, if it's July 1st or not, but essentially you won't be paying GST on that home, right? So depending on the cost of your home, it could save you quite a bit of money, right? Right, Roxana? Because that is a cost that's involved. So definitely that would be a savings for you when you purchase your home for sure.
And you could put that towards a down payment, or you could qualify for a higher amount.
Right. Absolutely. Absolutely. So let me see here. I'm going to see what else there is. So there's a little, another question about the 5%, the down payment at 5% versus the 20%, right? So we know that the rates are slightly lower, right,
Because
Roxana,
these are insured, that's correct. So if you're
for
putting less than
insured.
20% down, then we talked about default mortgage, default insurance. So these houses have insurance on them, so they're protected. So the insurance, because of the insurance, the rate's a little lower than a conventional mortgage.
Right. So it is less. However, you are paying the insurance, and the insurance is through, there's a couple of places, right?
Sagen and
Sagen,
CHMC.
yeah, right. So you've got a couple of options if you want to get into the housing market and only have that 5%. And if you actually do talk to one of our advisors, they'll give you all the information on mortgage insurance. I think we have a pamphlet, right, Roxana, and we have the contacts of who to contact for mortgage insurance. It's not direct, like we don't do that. It would be through this third party that Roxana mentioned, the Sagen or CHMC. There's another question about, I guess, saving up for a down payment. And they're asking, we mentioned like the TFSA, we mentioned FHSA and the home buyers plan. They're asking about how about kind of like high interest savings accounts.
Sorry, I didn't get the question.
They're asking, about how about a high interest savings account? Would that be a good way to save up as well?
Saving anyway is always good, right? But then these, like for home buyers, like if you're planning to purchase your first home, then it would make sense because you get tax implications, like these are tax deductible, so you can claim them while filing your taxes. Like for RSP, if you put into a FHSA plan, like if for your high interest savings account, if you make interest on it, that's taxable. Whereas if you put into a tax-free savings account, that's not taxable. So there's more than just putting into a savings account. If you have maxed out your contribution room for all three, your FHSA, your tax-free and your RSP, then definitely high interest savings account. Otherwise, I would recommend putting it towards your RSP, your FHSA, or your our tax-free accounts.
Great, thanks. And there's another question from one of our members. They're a senior and they're looking to downsize, right? So they want to purchase a condo, but they want to move into the condo before putting their home up for sale. So they're asking, is there such a thing as a 1-year mortgage that they could pay off at the end of the year once they do sell their home, like a type of a bridge financing?
So bridge financing is only good for a certain time. So if it's for a year, it would be advisable to go for a 1-year closed mortgage, if that's to avoid the penalties, right, later on.
Okay, so you're saying that if it is a year, you would recommend doing a 1-year
Correct.
closed mortgage rather than kind of a bridge financing, which
Correct.
might be only just like for a month or two type of thing, right?
Correct, because it's with the limited timeline, and like you have to put your house on sale, so you don't know the timeline when your house is going to get sold, right? So you don't want, so because bridge loan comes with certain timeline, 120 days, 90 days, right? So there is timeline. So I would recommend going for a 1-year fixed closed mortgage.
Okay, great. And we have another question from Cheryl, our member. She's asking if you're buying a house this year, can you put money into an FHSA, then pull it out? Like if they buy the home, like let's say a few months later, and they'll take it out for the purchase of the home.
That should, you should be okay, because it's like you put $8,000. That's the limit for this year. If you opened it last year, then it's 16. But if you just opened it this year, it's $8,000. That's correct. And
Yeah, and she's asking, Cheryl's asking, is there a benefit to this tax wise, right? So there would be the benefit
they are
because
tax deductible. So when you file the
right.
tax, they're tax deductible, right? Your FHSA contributions are tax deductible.
Yeah, so if you do that this year, then when you're doing your taxes in March 2026, you can deduct it from your income for sure. So there would
Correct.
definitely be a tax savings.
Correct.
I think that's pretty much it. There are a couple of questions that are very specific. So, and you've given us your contact info, so we will definitely get out to you directly. Like Ruth, I see there's one about a gifting in a certain specific case, so we'll reach out to you directly. And actually, there's another one that just came in, Rukshana. It's from our member Al Marie. She's asking, so they have an account that's they use for like, I guess their emergency needs. And I guess the question, and maybe you can correct me if I didn't get this right, but I guess they're saying, well, if they need them for emergency, they would have to take them out. So they're looking for, how can they obviously put in a savings account that earns a good interest rate, but is still flexible for them to take out when they need it?
You still can put it into a tax-free savings account, right? You don't have to lock in. You can just put into a tax-free savings account, because those accounts are accessible at the branch anytime. So it's not locked in, but you still get the benefit of having it into a tax-free savings account. But for more specifically, I would say talk to your mortgage banker, talk to your bank advisor, and they will be able to assist you, because they will know your situation better and they can guide you to the right direction.
Oh, I'm sorry, I missed one actually, Rukshana, and this is important because it's on variable mortgage rates. So they're saying if I have a variable mortgage rate and the rates, the interest rates go up, does your monthly mortgage payment go up?
Yes, it does. This is a change that we recently had, before not, but yes, your payments will increase if the interest rate goes up. But the best thing is, if you see the interest rate going up, you can always close it into a fixed rate.
Okay, perfect. Okay, I think we've gotten through most of the questions, Roxana. So again, thank you for all the great information. Lots of great questions for sure, right? And again, I just want to encourage everybody to use the information that we have on alterna.ca. Start with research for sure. That's always the great part. The more you know, the better, and everything is online now. So I've got a QR code on the screen here. If you want to book an appointment, you can absolutely do that as well. As I said, we will get back to anybody that we didn't get your question in for sure. So just, look out for an email for us. So the email that we send you will have a link to to the actual webinar that's being recorded. We will also, it'll also have a link to a survey. So we'd like to actually get your input on what we can do better, what you liked, what you didn't like, let's say, or what we could change possibly. We're always looking at improving. So if you take just, it's a very short, like just 5 questions. If you could take some time and give us some feedback, we would greatly appreciate it. So I just wanted to close out. Again, thank you so much, Rukshana, and thank you for all of our members for joining us today. And if there is anything that we can help you with in your home buying journey, please feel free to reach out.
Thank you, Carla. Thank you, everyone, for joining us today.
Okay. Thanks, everybody. Have a great day. Bye-bye.